Good morning, everybody. How's everybody doing today? Hope everyone had a wonderful weekend. Hopefully you guys can hear me. You're starting to come in, I see. If you could say a quick hello and let me know that the audio is coming through, that would be great. John, nice to see you. Good morning. Good morning, Miles. All right, sounds good. We are off to a pretty good start this morning, at least with the pound Aussie. It's always nice to get a trade like this. Hopefully we'll get some more consecutively. First trade of the morning right here. 79.06. Of course, we would call that a 79.04, adjusting it down to through the 5 level, but you could see the nice targets hitting its target 4 even, still trailing. Trailer would be at 78.76 now. So some nice targets. Taking off the 2 pips adjustment, you got the 13, 22, 31, and 40 pip targets. Take off a little bit on the spread too, of course, but it's a nice trade. Still going. See if we can get another move lower. Crude oil. Don't have anything on crude oil. Looks like it would have been a really nice trade, and this is actually a trade one can take. You just have to make that 1 tick adjustment. You can see how this is called the squeeze zone, where the 50 moving average is squeezing down on the 200. And if there's an entry inside of that, the system's going to filter it out because this is a lower odds trade. That doesn't mean it's not a trade that will win. In this case, it would have. And this one is like, sitting right on the fence there. The entry's at 28. The moving average is at 28. Doesn't bother me to go 1 tick higher at 29 if you want to take that trade, and that's certainly optional. That's why we show these setups in gray. And look at that, hitting that target 4 right on the nail, and then going higher even, because actually the stop would have been at 49 and it would have held. So this trade would still be going. If anyone is in it, let me know. If not, we'll just keep looking for the next setup. Good morning, Keith, Brett, John C. Hope you guys had a nice weekend. In the bottom right corner, we have the May soybeans chart with counterpunch. Thought we'd start looking at this one again. It's been a long-term performer over the years. We haven't really followed it in quite some time. This is a setup, and there it is actually, 14.11, targeting 08, 06 and 3/4, and 05. So the first trade of the morning on soybean futures right there. The stop is at 14.15 and 1/4. Remember, this trades like the ES in $50 point increments, $12.50 a tick, 1/4 point ticks. Target 1 is your first objective if it's large enough. Anything over, you have to decide 5 or 6 ticks. This one is 11 ticks. So if we can get to target 1, it's quickly on its way. There it is. So just like that, 1 and done on soybeans, and soybeans now trying to get to higher, bigger targets, but you got to move your stop. There it is, moving to break even, +1, -1, I should say. Locking in the 1 tick. So soybeans, getting it done, bing, bang, boom, just like that. John, when you say it closed all your positions, are you referring to not trailing further down because it depends on how you have your presets. So one thing you would need to do if you want to trail is eliminate target 4 and put that into the you have to make that a percentage that you scale out like the other positions. So a lot depends on your presets. You could set it up for a 5 position trade and 4 positions go to target. We could take a look at it, but I'll show you if you don't know what I mean. I'll have to open up the demo and show you. So soybeans in the lower right corner, look at that, almost hitting target 2. It's 1 tick away. There it is, target 2. So that's 17 ticks. So just to put it in perspective, target 1, 200, let's see, 10 ticks would be $125. So that's like $137.50 for 11 ticks. And then 17 ticks would be $200 a contract, actually $212.50 a contract. It's like the ES. And you can see that's a nice trade. It's amazing how it's like looking at visiting an old friend, because this is exactly what got us excited about it years ago. Doing the same thing. All right, looks like the pound Aussie did just stop out also at 78.72. So that trade's finished. Again, that trade was one and done, hitting all 4 targets and stopping out at the trailer right there. A nice way to start the morning. Crude oil finally did get short, by the way. If you missed that first trade, that was a really nice one, requiring a 1 tick adjustment around the 50 moving average. You can see that the filter caught it because it landed right on the line there, that entry, for a great trade. If you adjusted it up, you could have done that. Meanwhile, here, this would be the first trade of the morning. If not, if you didn't take that gray trade, which is fine. This one got short at 69. It's targeting 61.50. Money management is at 52, which is 1 tick below the 50 moving average. So hopefully it could punch through enough so that the stop could be moved to break even. It's a good sized trade too. 19 ticks to target 1. So let's see if we can get there. Looks like it's trying. You can see the support forming there at the 50 moving average. On unleaded gas, this went off to a nice start this morning also. You can see the trade in the squeeze zone, graying out just like on crude oil. But then the long trade comes after, and really nice, you can see. Just missing target 3, but getting through its first 2 good-sized targets, 52 and 80 ticks, and then trailing up. And that one's one and done. This might be a short session, guys. Continuing onward. YM a little bit just missing that quick winner there, getting long and staying long so far. It looks like it got short, but not with our stop and reverse adjustment. So long from 32.426 and maybe even adjusting up, I don't know, 2.9, whatever. If you got long here, you're long. You should be long. And then the stop and reverse adjustment would be 2 ticks below 09, so 07. And it only got to 08. So the YM looks like, well, look at that. The YM just got to its target 1, 24 points, and that's power of quitting on this 14-tick momentum bar. Target 1's your primary objective. And so this one is one and done as well. You just have to make your stop and reverse adjustment, and this is why we do it, because it avoids getting short here, right? And instead you stay long, and now the stops go to break even, and it just came up and hit target 2 for 37 points and going higher. And the stop you're going to have to do manually. Right now the stop should be at 29, 2 ticks below the balance line. And it just moved up again to 34, right? It's at 437, 2 ticks below that's 35, adjust around the key level. 34 is your stop now. And it just stopped out. So this messy looking chart, very profitable, really. It's only messy because we don't have the stop and reverse adjustment tool activated. You could turn it on. I just prefer to do it manually. If you turn it on, it definitely cleans the chart up in this case. But, I mean, you could do this if you want. I just like to make my own mind up, because if you turn it on, it adjusts all the trades that came prior. I'm only interested in adjusting the trade that's current. But just to give you an idea, you turn on that stop reverse adjustment tool, and you see how it stays green. The pink bar is just counting X amount of bars since the moving average crosses over. So that's the 8th bar since the crossover. That's all that does. So see how it stays green? Because now it adjusted the entry lower. But it also adjusted all the trades in the past. And they only want to make an adjustment when you're in a trade, to try to stay in the trade you're in. I don't want to change all the sequences of all the trades prior. And for that reason, I'd rather just do it in my head than have the calculator do it for me. Turn it off. So that one's done. Yeah, and crude oil, look at that. Hit its full target, 19 ticks. Stop moving lower. And that one is one and done. So far, everything we've seen is one and done. Soybeans couldn't quite get to target 3, but it had a really nice targets 1 and 2 winner and then stopped out. So soybeans, one and done. And I think the more you guys watch the soybeans chart, some of you are going to end up trading it for real. I feel like I'm wasting my time with the RTY. It's just I don't have a feel for that anymore. I really don't have a trade plan that I feel confident in. This particular one, a 1.5 bar momentum bar. I mean, I don't know, pretty fast to get into these setups. I don't even know if it's tradable at that point. It didn't look like it was. Euro yen. So this is one we were thinking of looking at, and really some nice movement here in the European and Asian session maybe. Yeah, the Asian session kicking butt. Look at that. U.S. session, I mean, it's moving. This is the first trade of the morning. We'll keep an eye on this. 129.68. It's got some good sized targets. You can see those. Stops at 86. I'll let you look at those targets. Let's look at the 5 pip momentum bar. I think that one's going to be too small though. That kind of looks the same, but these trades are smaller. You can see this blue trade back during the late European session here, and none of the targets are even 10 pips. So that's the problem with this chart. It's faster, but the trades are too small. It doesn't quite pass the sniff test. The Asian session trade, even those are kind of small too. I mean, it's big enough, I guess, but just I'm not sure about the euro yen. It just doesn't seem to move like it used to, but it produces a good trade most of the time to get one and done. So we're kind of hoping to find out by watching it. So are there any questions? I notice that we've got a good attendance. Please hit the like button. If you like this, gives me motivation to get up when it's still nighttime out so I can be with you guys. Give me the love and appreciation. It helps. Actually, it helps because the YouTube algorithms kick in. Let's see. John C., did you figure out your FX synergy question? Let's see if I can help you with that. All right, so I haven't really messed with my settings in a while, and admittedly, I'm not an expert at FX Synergy, but I have it connected to a Wanda here on a demo account on this computer anyway. And let's just say, for example, one second. All right, so like on the Trade a Day, our Trade a Day service, Kevin put this trade out this morning here. You would grab this like so, hit Command C to copy. So you just copy this off of Discord, double click on pound Aussie, parse, and then hit place. So I'll just place that trade. You know, the market's way below it. So here it is. You can see it. Now notice right here that I've got 3 partial positions. A quarter of the position comes off at target 1, and once that comes off, then there's 3 pieces of the position remaining, right? So then you have to take the next 1/3 off at target 2, and now there's 2 pieces of your trade remaining. So then at target 3, you're going to take off half of those 2 remaining pieces, and now 1 piece of your position is remaining. So what you could do is you could type in another 50% price and then put in target 4, which is automatically put over here. See where it says TP, take profit? That's your target 4. So you want to move it. You want to move it off of this and put it over here. So you could type in 1.7864 over here. 1.7864, and actually instead of taking, oh yeah, that would be 50% off. So so basically you have to decide how much you want to remain on your trailer, right? So I've got it set so it takes off half of my remaining 25%, the way this is set up. So then you want to delete this, basically. You don't want to, you want to get rid of this, just make it 0. So when it hits target 4, it takes off the remaining, basically it's going to leave 1/8 of your position, the way this math works out. Yeah, so John, if that's what you do, maybe your lot size got to the point where it just couldn't get any smaller. So that's the other thing to consider, is that the size of your position may have not been enough. Yeah, well, now John's saying you need to adjust the other three targets, and that's if you want to go an even 20%. If you want to take 20% off evenly, 1/5 of your position, then you would not do what I just said. Instead of going 25, 33, 50, you would go 20, 25, 33, 50. Something like that. I forget. Do the math. Okay, so the one other thing that you could consider, John, and again, this is something that I just haven't messed with it enough. I'm sure you could figure it out. But if you were to come down to settings and open up settings and go to presets, up in here, you could probably set up a situation where instead of it going, the three targets like I showed you how I have mine set up, you can set it up the way John is suggesting, where you go 20% off at each of your positions. You could set it up in presets here. Like here, it's partial 3. This is where you would do it in presets. So you would go 20%, then 25%, then 33%, then 50%. And then as far as target 4, I'm not sure how to tell it to not put in a target 4. You might just have to just go in and delete it manually. There may be a way to do it. I'm sure Martin would tell you how to do it. I just don't know how. But it's flexible. And then you set up your presets, and then you don't have to worry about it. But it's no big deal to just manually go in there too. Good? Makes sense? Pretty convenient being able to just hit the parse tool and get that trade entered in. I mean, now that we've been using it for a while, it's nice, isn't it? I mean, you guys should be enjoying it. Remember how it used to be? You got to manually type in everything every time and quickly and try not to make a mistake. I mean, just remember what it used to be like, and then what it is now with the parsing tool. It's just the rapid fire entry tool. Hopefully you guys are enjoying it. Yeah, it's great, I think. Tony with a question. Can you briefly sum up your 1 or 2 tick adjustment rules? Yeah, so Tony, adjusting is just trying to work around support and resistance levels that show up on the chart. So there are a number of categories that those actually represent. For example, 5s and 10s on price quotes, and 25s and 50s and 100s. Some are stronger than others. So you don't want to get long at 49 if you could adjust 2 ticks up and get long at 51 instead, right? You don't want to have your stop at 51 if you can move it down 2 ticks to 49. And that will often keep you in the trade. I mean, it won't always keep you in the trade, but the times that it will keep you in the trade add up to a lot. So the general motto or guideline that I use is you can make a 1 or 2 tick adjustment. 1 or 2 ticks are okay. 3 ticks sometimes, but I like to have more than one reason. Like I start thinking of, well, what are my reasons to adjust more than 2 ticks? Is it a big enough trade? Is there another reason? And then, so 1 or 2 ticks are okay. 3 ticks sometimes, 4 ticks rarely. I mean, you could even say 5 ticks even more rarely if it's a big trade and you're trading into a major support and resistance. You got a lot of room in the targets. You don't want to adjust yourself out of the trade and you mess up your money management rules when you make an adjustment. You really don't want to adjust. And support and resistance levels are broken all the time. So the whole idea of adjusting is just to move the needle over a little bit to improve your win rate a little bit. And that adds up over time. So another adjustment might be around a chart level. So I always look for pivot swing levels, however you want to call it. Like, for example, on this euro yen short, I mean, you can make an argument to move that entry below the spike on the bar on the left, because you don't want to get into a reaction. It comes up and tests the highs and makes a higher low here and then comes down again. I feel more comfortable about getting short in this case. But a lot of times it won't push through the spike. Like, that shows you near-term support sometimes, the price action itself right there. So if you have an entry at 68 and that spike goes down to 66.6, like a 1.4 pips, why not make an adjustment down to 66 and make sure it could push through? So those sorts of adjustments, I think, are good to do at times. And you get better and better the longer you trade, because you realize which support and resistance levels are stronger. You learn that. So another thing to adjust around could be the 50 or the 20. The 20 SMA could keep you from getting short. If you just make a 1 or 2 tick adjustment through it and the price can't get through it and instead goes up higher and puts another leg higher, because that 20 SMA is a good pullback zone, a good reaction marker. We have your action, reaction, subsequent action, right? So you don't want to get short on a reaction. You want it to push through and make sure that instead it's an action move in the other direction. So these are just concepts. And nothing's 100%. You're never going to get it right 100%. You just have to have a way of doing things that pushes the needle a little more in your favor, and then you get used to it. And you start, if it improves your results over time, then you keep doing it. Some charts, you don't need to do it. Other charts respect those key levels more. And you learn that with time and experience. Now, with the stop and reversal, that's a unique situation. A stop and reversal is when you're in a trade and the trade isn't going, the market turns, which happens all the time. So, but sometimes it'll turn and it'll just kind of give you a head fake, and then it'll resume in the direction of your original trade. So we want to try to stay in the original trade if we can. We want to protect the position we're in if we can. And that's where we make that 2-tick adjustment on the reversing entry. And I go so far as to also see if there's a key level to adjust around as well, because I want to protect the trade I'm in. But if the price action turns the other way and pushes through to the adjusted entry and any key level adjustment, that shows me enough information that I need to flip over and get into the other direction and reverse my position. And sometimes they will both be wrong. Sometimes the reversing trade will still lose. But a lot of times it will cut the original trade's loss a percentage down, maybe in half even sometimes, or less or more, but it could be significantly less. Would have been a full loss. Now it's just a partial loss. It gets you in the reversing trade that's a full winner, and you got a 2-trade sequence that gets you to your goals. I mean, there's no perfection, and no one knows what's going to happen ever. Like, here's a case, well, no, it's not a stop and reverse. This one is, but the entry is right up near the stop, so you could just move that reversing entry to the stop. It's not really the stop and reverse I'm looking for. Yeah, there aren't any really good examples on this chart. If I find one, I'll point it out to you. But ultimately, you want to, the concept is you want to protect the trade you're in while being willing to flip over in the other direction because that's what the price is doing. That's what the market's telling you. You just want extra price action to confirm it. So you try to stay in the original trade if you can, but you got to be willing to jump ship and change direction if the price action tells you to. But we don't know what's going to happen. We're just along for the ride. So that whole concept of just dancing with the market works if you could just surrender control to the market. How about the rule you did earlier on not hitting the stop and... Oh, yeah. Okay, that's a good example. That was on the YM. Okay, good. Yeah, that's a good example, actually. Let's make this bigger so we can see it. So the market gets long here, right? Sometimes the most awkward trades are the best trades too. You can't be afraid of all the lines above. Yeah, that could be resistance, but it's only resistance. I mean, again, the trade setup should take precedent, and you shouldn't be afraid. You shouldn't be like, oh, look at those lines. I better not take that trade. That's a mistake. It's not a mistake in certain circumstances. Certain circumstances, something you've tested and known and you understand your market, you might be like, okay, well, the odds are lower, I'm not going to take it. But if it's the first trade of your trade plan, and there's no reason to not take that trade. These lines are not the reason. It does find resistance here, and then it pushes lower, and you get your setup off the 50 moving average. Now, this could move down. I mean, it could get short here and go down, and then you would have a reduced loss on the first trade and a full winner on the second, if that's what happened. So, but we want to try to stay long if we can. We want to protect the trade we're in, the long trade, right? So the entry is at 409. So the general rule is you make a 2-tick adjustment, a stop and reverse adjustment of 2 ticks, and you move that down to 407. Now, what if the 2-tick adjustment pushes this to 406? Like if the entry isn't 409, if the entry is 408, for example, and then you make a 2-tick adjustment to 06. If I'm 1 tick in front of a 5, I'm going to move it 1 tick beyond. So I'm going to then make another key level adjustment to 04. So instead of 08, it adjusts down the 2 ticks to 06 and then a key level adjustment to 04. And I realize that's a 4-tick adjustment, but I've got 2 reasons. I'm working around the 5 and I'm trying to protect the long trade. I'm willing to give up the 4 ticks, especially with targets of this size. These are good sized targets. 4 ticks is only 10% of your target 2 that you give up to try to stay long, right? It's the price of the insurance premium. So it has value. In this case, it was only a 2-tick adjustment, which is only 5% of the way to target 2. I'm willing to pay that insurance premium to stay long. And it paid off, and I didn't even have to pay the premium. I got a refund on my premium because I didn't pay the extra 2 ticks. It only pushed down to 08. And that 2-tick adjustment did protect the long trade. You did not have the price action confirmation pushed down far enough to reverse your position. Right? You understand the concept? It's a simple concept. You just apply it over and over again each and every time and make it a habit. Sometimes it won't work. You pay the premium. This time it worked. You don't even pay the premium. That's the point. That's the beauty of insurance. You hate it until you need it. Then you love it. The strategy thinks it got short. I mean, the code is the code, right? It looks like it hit the entry. Now it's going to print red. It does. Once the yellow trade stops out, you cancel the stop and reverse. So you keep the stop and reverse on because the entry did get hit. Like it got hit on the entry unadjusted, and so you keep the stop and reverse order open because it could come back down again, and then you have to flip over if it hits your entry. But once it stops out, then it's canceled. So you cancel your stop and reverse and you stay with your original trade. So that's something you need to practice. You have to practice executing that. I always say you should open up a sim account and practice putting stop and reversals on. Cancel them, replace them, put them on again, cancel them again. Get really good at it. So you know the maneuvers, you can do it quickly. So Tony says, yes, you adjust your entry or reversal based on price action, such as a pivot. Yeah, well, maybe if there's a pivot, like if you adjust this entry, let's say this is a stop and reverse, the entry is not at 24, it's at 26, right? Because we're going to adjust that anyway. We're never going to get long at 24. We're going to adjust around that 25. The quarter century numbers are pretty strong. In this case, it wasn't, but I'm still going to get my entry in not at 24, but at 26. But if I look to my left, there's a spike at 28. So let's say it's a stop and reversal at 26, and I have to move it up to 28 because of the stop and reverse adjustment, right? 2 more ticks. Am I going to get long at 28? I'm going to push it 1 more tick to 29. So to make sure it's going to push through that spike. Otherwise, I'd rather stay short and stay in my original position, you see? So you just kind of look at the chart. You don't want to over adjust and you don't want to be afraid of the trade, but you do want to try to protect the position you're in. And over adjusting, here's the thing about making too many adjustments. Not only does it mess up the trade setup, because remember where your money management is too. The money management where you move your stop to break even is well placed. So what do you do if you've now beyond your normal entry, 4 ticks beyond, and then you hit that money management? If you lock in a tick, you get stopped out of what could be a really good trade prematurely. So, it definitely changes how you manage the trade sometimes. So you got to be careful of that. But the bigger point is that if you find yourself adjusting around this and adjusting around that, and you adjust around this, and then you look to your left, and there's another thing to adjust around, and adjust yourself out of the trade, that's an indication of trading with fear. And you don't want to do that either. You can't be afraid of the trade. You're only looking to make small adjustments when it's appropriate to try to push the needle a little bit further to your advantage. That's it. We're talking about the 5% art to trading. It's very small and subtle. It makes a big difference sometimes, as it did in today's YM session. That's a big difference. That's the difference between 2 losers versus a full winner, 1 and done or 2 losses. Just that 2-tick adjustment. You see? A small adjustment made a big difference, and that's all you want. If you start adjusting more than that, you exceed that 5% art to trading, and you're probably on a slippery slope to destruction, because what happens is you have just blurred out your trade plan rules. Now you don't even know what your trade plan is anymore. And that's a much bigger problem. You want to not let that happen. The trade plan rules are what's critical, because that's what you can test and prove and get measurable results to. So if you start winging it too much and adjusting here and adjusting there and being too big of an artist, you end up with big problems. Even if the decision saves you a losing trade and it ends up being right, that might be the worst problem of all, because then what happens next time? What happens 3 weeks from now, 3 months from now? What happens every time those situations come up? You're going to end up with a trade plan that's not a trade plan anymore. So all of that, I think, is very important. Now, you have to also take that in context too, because you might be 10 months in or 12 months in and having a better understanding of the market and chart you're trading because of time and experience and what that's taught you. And you might be now more equipped to make those kinds of decisions where you just know for this one situation, you really need this sort of adjustment that's not really within the realm of your plan or rules. It's an outlier, but you've seen it before. And you make the decision to stay with the original trade. And if it wins or loses, you're willing to live with the consequences without bastardizing or screwing up your trade plan. You see, but that's time and experience. You can't teach that. You learn that over time and the experience that you get. So you have to allow yourself to get to that point. But that's the exception, really, to what I'm explaining. So hopefully that is helpful. I'll be right back. All right, I'm back. So Tony asking if we have a 30-year bond or a 10-year bond. So those used to be markets that we followed regularly, like years ago, when there was volatility and movement. Now maybe it's getting to that point again. I haven't looked at it in a long time, but I don't mind. We could pull up a chart. I'm gonna use Counterpunch for this. We could look at Spotlight as well. I'm not sure actually what. Let's see. Let's look at a tick chart. That's easier than a momentum bar. So we'll look at the 30-year first. I got the wrong. Let's just see what a tick chart looks like. Yeah, so you can see it's just dead. There's nothing in there. I mean, it's dead, right? There's no movement. There's no range. It's just nothing you want to. I mean, what are you going to trade on this? So if you're starting at 8:30, right, traded out of Chicago and the market's open, this is one you may even want to start earlier in the morning. But let me just check the timing on here. I don't see any setups. Start time. Yeah, the setups are just too small. So I would have to turn off this. There's a filter here, the small setup filter that's probably preventing trades. I forget where it is. Ignore small setups. All right, let's just turn that off. All right, so here's some trades. So you got a short trade here. You got 5 ticks to target 2. I mean, at 32.50 a tick, but I mean, there's no movement at all. You look at a 233 tick maybe, but that's just going to keep producing smaller and smaller trades. So you can see there's this much. I mean, there's just nothing, right? I mean, I don't know about you, but that doesn't excite me. You might be able to pick up a winner here and there. I mean, sometimes you do get these sorts of moves. I mean, I'm not going to discourage you. You might decide that maybe you get 2 or 3 good trades a week that win a lot, and maybe that's worth it, right? But when you do the sniff test, the first thing you do is look and see if there's enough trades in a session. I mean, you got a few. I chose Counterpunch because there's going to be more trades than with Spotlight, but you could try Spotlight. Then you want to see if the trades are an appropriate size. Are they? I don't know. This long trade here, it's like, 1 tick to target 2. Not too excited about that. If you look at the 10-year, what's that? TY, right? 10-year. TY. Yeah, 10-year. So that's even worse. Yeah, that's why we don't look at bonds. So if you want to look at gold is real. There's some nice gold chart. I mean, gold, I know with Spotlight, the 610 tick tested really well the last time I looked at it, but it's been a while. This is a 233 tick with Counterpunch. Gold could start earlier in the day. You can see there's plenty of trades. This chart's too fast. I think a 610 tick might be the answer. Yeah, kind of slow on a 610 tick, at least today. If you go earlier, starting earlier in the morning, you got some nice movement. There's 2 white trades, for example. Let's look at Spotlight. Basically, I would just use the YM or the CL and just copy and paste and change the symbol. So this is an 8 tick range bar. Let's see. Let's take a look at. Gold moves like it's 1/10, not 1/100th. So if we were to go, is it May gold? It's May, isn't it? GCK 21. Look at a half point momentum bar. Start with that. Might be too fast. Maybe a 6 tick. Yeah, so you see, Spotlight looks pretty cool, doesn't it? You see it right away. It's still not a lot of movement, but you do have your 1 trade here at 8 a.m. You have this one back here at 5:40 in the morning. You could look at a 610 tick, a 6 tick range bar. Let's do a 6 tick. I think that's the one I actually was interested in the past. So that one doesn't give you the short. But look at the trades. They look pretty good, don't they? The trades look really good. It's just figuring out the time and also what setups you want to use. So, for example, if you're using the diamond level, you could have a lot more setups and different ways to take advantage of these. So, I mean, I think there's work to be done on gold. I would look at a 5 or 6 tick momentum bar, either with counterpunch or spotlight, a 377 or a 610 tick chart, and then do your fast testing on all 4 of those. And the ones that give you the best results, and that's the one you drill down further with the UTA, right? So I would fast test 4 different charts, and the best one that wins most of its sessions with minimal trading, sticking to our goals, that's the one. Let the cream rise to the top, right? So that's the one you would focus on, and then commit time with the UTA spreadsheet. And like that, you could develop a nice trade plan if it's going to work. And that would be the process with any market, not just gold. I should have kept that open. Let me see something. I want to see this. You can see that the USO is the US oil ETF is showing that could be in a longer term, early stages of a bull market in crude oil. It's yet to be determined, but it's certainly way off its lows. And you could expect maybe a move 50% of the way of that move down, like getting up to this level here. Seems pretty reasonable. Maybe touching its 200 moving average, but that could come down. So getting long on USO might not be a bad idea. But what I wanted to look at was some other interesting things. Anyone know what the symbol is for copper? Copper futures? I forgot. I should know this, but it's been so long. Anybody? UG maybe? HG? Okay. I got one of the G's right. One of the letters right. Let's take a look, because I know, with inflation and all, commodities are definitely kicking in. So looking at other possibilities to trade, like copper, might be interesting. You got 43,000 contracts so far today. Now, I'm not sure what time you would start, but you could see some nice trading in here. You could see some good setups. I got the add-ons showing you additional places that you can get long with the green trades, but the 2 counterpunch trades, clearly, I mean, I don't know how much is a tick value either. I forgot that as well. So copper may be something to look at, right? Another one that could be interesting, our old friend, wheat. If I remember correctly, we used a 200 tick chart on that, getting away from the Fibonacci numbers. And this one might be worth looking at. I mean, if you were to fast test this, a lot just depends on when your start time is. I think 8:30 was the start time. And if that's the case, you're getting in sync with this trade here. You're getting short here at 8:30, and it comes down and hits a target 1 for 7 ticks. $50 a point like soybeans. Then the second trade here. Now, whether you're going to use the trend mode indicator or not, these are all things you have to test. But that's 2 winners on what starts out messy and ends up a nice long trade, but 2 winners even with the messy chart. So wheat, soybeans, copper, gold. You could look at some currency pairs too, and those could be interesting as well. Now that they have that extra digit, I haven't really paid a lot of attention. So if you're going to do range bars, you have to kind of adjust for that extra digit. But let's just look at a 233 tick chart of a few currency pairs for the heck of it. So this is the EC, the Euro currency futures. This one, again, out of Chicago, and you have to figure out, just start at 8:30 just to keep things normal. That's when the market's open, 8:30 Chicago time. So here's 8:30 right here, and it gets in sync right there, right? So you got the short here, you get in sync. Getting in sync is fine. I think you want to get in sync as long as it hasn't hit a money management level or stopped out. So here, the first trade of the morning, you're one and done. Now go look at 20 more sessions and see how it looks. And then that'll tell you if you want to keep looking. So it has the extra digit, just like the Forex currencies, but I think it's in fifths. So you have to figure out what the cost is, the price. I think it's $12.50 to the 4th digit, so it's probably $6.25 or a dollar half. I don't even know. Yeah, $6.25. It would be half of that. So it's 1937 and a half, for example, if I remember right. So that's $6.25 for that half a tick or half a pip, whatever you want to call it. That extra 5th digit. So a couple others that are worth looking at, like you might want to follow 3 currency futures if you can make sense and you get the right chart and you test it out and you can quit positive most of the time. So the British pound, here's another one, the BP. And if you can see much less movement. So this one might not be good. So this one at 8:30 stops and reverses to short. You can look at the European session, of course. That's not the European session. You'd have to go back further. The European session is more active. I don't know if the British pound's good. I don't know if the 233 tick is good with the British pound. What I do remember from the British pound is that it can get hot, but it could also really cool down. And another one that might be interesting is the Japanese yen as a currency future. But not enough movement during the U.S. session, at least as far as today goes. But if you go back and you look at the Asian session, maybe there is enough movement. I don't know. And remember, this is just a spontaneous chart that may not be the right chart. But you have 58,000 contracts. So those are all good choices. Another one that works really great with counterpunch and using the same chart, this 233 tick, and this has been a long-term performer, and I haven't looked at it in a long time because it's just, I have to sleep sometimes. But the DAX, you start at 2 a.m. New York, 2 a.m. New York time is about 8 o'clock a.m. European time. So if you come back here, the 8 or 9, maybe it's 9 a.m. So I don't remember if this was trend mode. Maybe it is. But the DAX is $50 a point, 25 or 50 euros a point, 25 euros a tick, which is a half point. So this one's one and done if you're going to target 1. So that's 11 ticks. 11 ticks is 5.5 points. So that's $275 just from this little move to target 1. Well, if you're going to a full target 2 winner, then you have the second trade. And look what that one does. It hits target 2 or misses by, I think, does it miss? Might have missed by a tick. 688 gets a 687, misses by a tick. So 2 trades, very profitable. And I haven't looked at this in a very long time, but it's kind of doing what it did a long time ago, just by first random look at today. And I think we had trend mode in this one. But the DAX, for those of you who want to trade at night, now maybe this works during the US session too, because this is a long trading market. This one can trade for a long time. But there doesn't seem to be a lot of action like there used to be in the US session. Not much. This used to be way more active. Yeah, maybe it is, just not today. You'd have to look. So there's all kinds of things to trade. I don't think you need to get caught up on the symbol so much as to just something that works and wins. And fast testing is the answer to figure out a lot of preliminary answers. I mean, it's the way you answer questions to see if it's worth your time and effort to explore further. And I will do that session with you guys. I haven't done it yet. No, keep promising. Anyway, I think that's going to sum it up unless there's any other questions for you guys. Again, I got my YouTuber hat on. Please hit the like button if you enjoyed the session. John will be here tomorrow. I'll be back on Wednesday. John will be back on Thursday. So we got a full week. Got the crude oil report this Wednesday. Be on the lookout for next week. The schedule may be a little different. I'll let you know as I have a clearer idea. But other than that, I hope you guys enjoyed the session today. Let me see if there's any last minute questions. Otherwise, I'm going to say goodbye. All right. Well, I hope you guys have a wonderful day, and I will see you on Wednesday. Good luck tomorrow with John. Bye, everyone.